Welcome back. It is 3:30 p.m. A short and sweet final hour session today. We just had FOMC minutes. Nothing really happening as far as deep cutting news. Just kind of par for the course. The Fed minutes really didn't mention anything about labor. It was all about inflation. Who was going to cut? They agreed to cut everything about September. It was just kind of looking back. So we just had the rate cut in September. Nothing really changed on the Fed watch tool. So here's current 92.5%. They're still going to cut through October. And then a 78% chance they're still going to cut in December. And then going into Q1 of next year, you're looking at a rate cut coming into March or April for a third cut, which would give us four since September. Markets for today, we are sitting up near all-time highs. My least favorite thing is in a zero-day environment, we sit here at the friggin' highs for the day and we close at the highs for the day. That is my least favorite thing. So if that happens today, it is what it is. We're hanging out between the 50% and the 100% ATR. Prices quite a. I mean, it's not ridiculously overstretched, but we had a plus or minus 28 points on the day. It's interesting where we opened up for trading this morning. We opened up right here around 67.24. I take that back. We opened up right here at 67.27. We went up exactly 27 points. Exactly. That's what the market makers had this morning for the plus minus. So technically, from where the market opened, we are still within the market maker move. But as far as points in the day and the previous day's close here, market is up around 41 points for the day. And pullback wise, low to high, we're looking at a low here intraday around 67.18 and a high up around 37 points. So I'd like to see here in the next 26 minutes that we are less than, if we are less than 6750, that would be a DPP winner or $1.20. If we are at 6760, I guess between 55 and 65, that'd be 6765. That would be a DPP iron fly winner that kind of washes things out. We'll see. So this is kind of the clutch for the last 26 minutes to see where things are at. If we're less than 6750, that would be ideal. I have a take profit set at 5 cents. So I'm trying to take this thing kind of all or nothing. I'm hoping that for the last part of the day, we're not going to push up in here to hit this 100% ATR. Floating gamma levels for right now, we seem to be sticky around that 55 handle. This is 67.55. I would like to see us maybe come back down and retest the lows around 45 if possible. But if we get above 55, 6, 7, 8, 9 into the 60s, there is a 100% ATR at 61. If I can pin a trade up there at 60, then I will get 400 and I guess 60 is perfect. That'd be a $410 pin, which would essentially wash my trade. I pulled in a dollar credit or $1.20 credit, so I'm risking 380. So risking 380, if I can pin it perfectly, I make 400. It helps me kind of protect the day. Ideally, though, is I'm only risking $90. If price is not up here, I'm risking $90. And if price is back below 67.50, then I will make $120. So it may not seem like a lot, obviously, as far as the net result, but a win for the day certainly feels a lot better than a loss on the day. All right. So we will see what happens here in the next 24 minutes as the market closes. But watching, chart alarm is set. I'll set a chart alarm up here also at 67.59 and see if we get a little surprise burst to the upside towards the close. Set a chart alarm here at 6759. Okay. So like I said, I'm kind of hopeful that we push back down into lows for the day. It's still green. It's still all-time highs. We tested just barely all-time highs. But looking at the price action, I mean, we're just sitting at the same resistance. It's very choppy for this entire week. We tested on, this would be Tuesday. We tested on Tuesday, fell, tested again today, sideways at the highs. So tomorrow, Friday, looks like there's no labor market coming out, no unemployment news, no non-farm payroll. I think that we had a stopgap funding fail for the 6th time between Republicans and Democrats. That's what I read headline-wise. But again, markets are sitting here near all-time highs. Silver at 44.65. Gold, let's go to gold and silver. Gold had quite the poke today. We cleared 4,000 like it didn't even matter. That round number didn't even matter. Here we are at 40.60 on the highs for the day. Silver getting up near all-time highs. This is the 2011 and 1980 high. We had a high today at 49.56. I'm officially out of silver, and I'm reestablishing new positions. I'm looking for also dollar cost averaging on pullback levels. Gold and silver continue to mount some pretty impressive charges. Bitcoin, little pullback yesterday, but back up into nearing previous all-time highs right around the 125 handle. We poked 126 over the weekend, and I have some measure moves up into the 132 level. So obviously, all-time highs would be exciting, would be great. We're still in a measured move. What I want to do if we hit all-time highs, trading wise, I probably want to add some put protection, maybe something out of the money. I'd obviously sacrifice that to the overall kind of the greater good of my profits. But target levels. I mean, this has gone from a price target to me to now an actual allocation. So having gold, having silver, having Bitcoin as staples in the portfolio is how I plan on moving forward into the end of this year into 2026. So if I'm taking profits off the table, it's just reallocating to a certain percentage, looking at dollar cost average in. A lot of my Bitcoin exposure, as far as the stocks and options that I trade, is using IBIT and FBIT. Or sorry, IBIT and FBTC. I also have BITO, which is kind of not great for me, but I'm still looking to see maybe I get lucky on the overall. There we go. BITO. Let's go overall positions here. So BITO is still in a bit of a drawdown. So I have some, year-to-date profits. It's in a drawdown. I have some shares that's trading at $20 and change. My break even's 26. There's still a solid dividend on it. I don't have it covered or anything like that. I'm essentially looking to get these things back to break even. If price action appreciates, gets me back to break even, I would enjoy the holding and the yield that we've been getting on BITO. Other than that, I've transferred most of it over to IBIT and FBTC. Okay. Where would you need to be in that 115 instead of 120? Do the math on that, Bill. Is your sell strike the 6750? Is your sell strike the 6750? Yes or no? If your sell strike is 6750, then you need price to be at 6715. I'm sorry. So on the 6750 by 6755, I pull the $1.20 credit. Okay, so technically my break even is 6751.20. So if you pulled in $1.15 credit, then you need price to be at 6751.15 or lower. So that's our break even price. If we're below 6750, then we win the trade. If we're under 6751.20, it's a break even trade. So right now live price is 52, so I'm going to be down, less than $100. Right? But time will tell. I mean, I'm watching this closely on my other screen. We're at 51.70. We come back down into this level here, maybe 49, 48, 47. Literally, the line in the sand is 50. If it cash settles below, it could be 6749.99. We make money on the trade. As long as we are less than 51.15 or 51.20, we're going to make money on the trade, or at least have a break even trade. I'll take a no risk trade. That's fine. Not losing on the day is fine. But it's right here into the final minutes. We'll see what price does. So that's why I put in here. As long as we're below 67.50, there's a full winner there. 55 to 65, I have a profit trap. That's a pin price. I put in an iron fly. So if we come up to this level, it's an iron fly pinned at 60. I pull that trade in for a 410 credit. So my risk is $90. If we fall down, I'll lose the 90. I'll gain the 120, and I walk away positive. If the credit is 50 cents or lower, if the legs be arranged, it will be a sure shot winner. What's the question? If the credit is 50 cents or lower. So I'm not sure what your question is saying. Is that a question or is that a comment? I'm going to let it expire. So, look, keep an eye on it, because my plan is we're trading at, let's go SPX here. So trading at SPX, here's my Iron Condor. It shows that I'm down about $90 right now. And we're trading, right around break even at 67.50. So if it closes and cash settles right here, I'm going to lose probably 30, $40. Again, not the end of the world. Actually, I take that back. If it closes here, I'll actually make like $20, $30. Sorry. I'll make like $20, $30. Okay. But, to win the trade, I want it to be less than 67.50, which is my sell call strike. All right. So Sandeep, I'm not sure what that question is. If the credit is 50 cents, you mean the debit? You mean the debit? So I took the trade as a credit. So I'm in for a $1.20 credit. So I want the debit to show under a $1.20, right? If I pulled in a $1.20 credit, the closing trade would be any debit that's less than that would be a winning trade. So right now my $1.20 is showing here. It's probably trading for close to $2. It's trading for like 240 right now, according to my broker platform. But we have 17 minutes and we'll see where the magic is, where the cash settles for the day, hopefully less than 67.50. All right. One cut for February, March. Yeah, but I mean, leading into that, we're gonna have there's gonna be three cuts already going into Q1, Q2 of 2026. I mean, we'll look at like four cuts total, right? So September, October, December, and probably a January. Actually, not January, probably in March or April. So September, October, December, let's say March or April. That's four cuts, and then the rest of 2026 is maybe that fifth cut. Maybe it's end of July, maybe it's end of the year. Look, if this government shutdown continues through the end of this week, we have no non-farm data. We go into next week, which is supposed to have inflation data. We also have a pretty major pay cycle in the government for a paycheck period on the 15th, I believe. And if we pass that, and all of a sudden we have a pay period that nobody's getting paid, especially essential workers working for no paycheck, that's probably more disruptive than it has to be. I get that Democrats and Republicans can't agree on stuff. It's been the nature of a two-party system for a while, certainly more contentious the last 10, 15 years than before. But it's not a good look to have. I mean, stopgap funding, it's like, what to do what? This isn't like a debt ceiling debate. Again, it's, to me, this is noise. Clearly the market is sensing it doesn't really matter that much. It's just noise. But when the market comes back in and we do have a release of data, how bad are the jobs numbers for non-farm? How bad is the inflation data for next week? If all this comes in and just we get kind of littered with news all of a sudden that's been backlogged, we'll see if the market has an adverse reaction to like, oh crap, we did have terrible jobs numbers. Oh crap, we did have high inflation, right? Because what's the comment? What's the magic word if you have if you have higher inflation and job struggles? Stagflation. Again, and it's a word that sounds bad. It's really not the reality. But it's enough to be a headline. It's enough to maybe get the markets rattle itself a little bit. Okay. I've heard some of them will not have health coverage. Well, that's not good. Okay. Sandeep, I'm looking at your comment there. I just need to know what your question is. So you're asking for like, how are you placing a credit spread trade? So the trade that I took this morning, I did a sell at 67.50. I sold that call. And then above that, I did a buy 67.55 call. I pulled that trade in for a $1.20 credit. Now, to be fair, I also put in a put side of that thing. That was a sell put. That was 66.90 put and a buy at 66.85. So those four trades together gave me a $1.20 credit. Because 50 is my line in the sand on the call side, basically it was a box, right? So if that trade, when I took the trade, it was this was center price. So I needed price to stay below 50, which is right around here. Okay. And I need price to stay above 90, which is down here. Big difference. So what did price do today? Well, price started to go much more bullish and it threatened my call side. So the trade that I took was based on this being a center trade. So I was looking to see if this resistance will hold and this support will hold and the market will stay inside of my range for the day, right? We opened up with a plus minus 27. The market's moved about 30 to 37 points, depending on where you start the day. 40 points from yesterday's close. Low to high is about 30 to 36 points. The exact open on the day was 27 points to the high today. So right now, my call side is being threatened. Okay. So you're just talking about, okay, so you're telling me that you want to take a credit spread for 50 cents Yeah, you can take a 50-cent trade and have a super high win percentage, but you're also going to take on 9 times the risk. So if I lose on that trade, I lose $450 and I win 50 cents. Look, the trade that I'm taking right now is a 92% win rate. So if you want to go to 50 cents and pull in half of the credit, maybe you win an extra 1 or 2% more than me. You're going to have losses. Your losses are going to sting a lot more than mine. If I have a loss, I'm losing $4, you're losing 450. But yeah, mechanically, your spreads, they pull in less credit, but your win rate should be higher, but probably by a little bit. And your risk wise, you're going to take on a little bit more risk than I am. I think that's what you're asking. All right, 12 minutes for the close. Let's figure out where things are at. Again, below 50 is good. If we somehow get a surge up into the 59, 60, 61 zone, that's fine. I've got a hedge trade up there. Ideally, the win for the day is let's get less than 50. Okay. If we can win something, that would feel better than nothing. So if we're less than 51, it's better than break even. If we're 50 or less, it's a winning trade, and we'll find out here in about 12 minutes. Okay, heat map for the day. I think everything advanced like 60+% of the market. So 60% advancing, led by some big names. Nvidia is up. 2% broad. Look at semiconductors, man, leading the way. Oracle's up. Technology's up. Tesla's back in positive territory. Amazon up. So after yesterday, there was just a big bounce back in all these stocks. Financials down. Consumer defensives down. Energy red. Not by a ton, but 60% advancing, 38% declining. Some big tech names leading the way. Software, semiconductors, hardware, semiconductors, tech, all pretty solid today. That's probably your best performing sector, I would imagine. If you go to sector performance right here, see if it gives us like the 1 day. This is yesterday's close, not today, I think. So 5-day, healthcare is up, utilities up. Yeah, this will print, based on the close today. We'll see where things settle. All right. What else? Currency strength. The Japanese yen. New Zealand cut by 25 basis points. That was a surprise. They expected a pause at 275. They came in 25. So New Zealand cut by 25 basis points. Pretty contained on the volatility side. So 40 and 70 on the vertical axis. We had the initial surprise on New Zealand, and we came back to basically neutralize that. So just a noisy day. But yesterday was kind of the weaker Japanese yen for day 2. We had Sunday to Monday a huge gap in Japanese yen weakness that has continued to current. So there's no sign of this gap fill. I talked about this yesterday. Look, I think inevitably the trade will find a way. One way to look at it, one level to look at would be right in here. If we have this huge gap and we have this large inefficiency for now 1, 2, 3 days in a row, that can continue. This is not a currency pair that you want to fight. Where does this thing stop? Well, there's resistance here. There's resistance here. I'm taking this low and this low and this low, and I'm measuring a parallel line. So right around this like 154 to 155 zone, this might continue straight up to this 154, 155. If I was interested in looking for a short with a low risk, high reward potential, that does look like a pretty good trade to me. It does. But it is something that if you lose quickly. If you're right, there's a lot of potential there for, you could probably get a 1 to 200 pip stop loss and get somewhere close to like 500, 600, 700 pips of profit. But I would be looking for this to line up on a smaller time frame and give you some type of topping pattern, give you some type of confirmation before you start guessing at that trade and guessing at that top. Okay. That's not true. I saw in the calendar it was forecasted to be a 25 basis points cut. So did they go from previous was 3% and they expected a 25, but they cut 50? Is that how it worked? Maybe that's okay. Oh yeah, you're right. So it was forecasted to be a 25. They cut 50. So the previous was 300 basis points. So 3% forecasted to cut 25. They cut 50. Got it. So yeah, one of the many banks that continues to cut rates. The big story in the Japanese yen is that they're going to have a new prime minister step in that is kind of a throwback to Shinzo Abe, which is crazy dovish for the Japanese yen. And if that quickly gets priced in, If that quickly gets priced in, then you're going to see pretty aggressive weakness in the Japanese yen. What the anticipation was in the Japanese yen is that there would be additional rate hikes for the BOJ. And it looks like right now that's probably not the case. So a lot of Fed speak this week. Tomorrow, everything is tentative on U.S. data. So unemployment claims tentative. More Fed speak. We've got Bowman speaking. We've got Barr speaking. We got Bowman speaking again. So that's it. Like, you don't have any real news as far as U.S. data. You just have Fed speak, and then Friday all tentative for non-farm payroll. You do have CAD employment for jobs. This is all, well, it's not even on the calendar. So they went from tentative to like, no, we're not going to have non-farm. So we'll just have like another week of no news. Yep. So yeah, a little crazy in currency land. I did say for the last couple months, two of the big baskets to watch is the dollar index or the dollar basket, as well as the Japanese yen. I think those are going to be your big plays for 2025. Right now, the dollar index is looking to break out of this falling wedge. So if the dollar, and this is a little awkward right now, but the dollar getting a bit of a bid from this low to high, higher low to higher high, if we get into open space above this rising wedge, getting up here, there's some resistance ahead around that 100 handle, and that could turn right back around for a dollar bearish trade. But I think if you're looking for dollar cost averaging, selling at 100, selling at 102, I'd say between 100 and 102, I would imagine the dollar is likely going to take a turn to revisit these lows. I'm just surprised that with this move in the dollar strength that we haven't seen the stock market budge. Gold at highs, silver at highs, Bitcoin at highs, stock market at highs. That's a little different from what I thought correlation wise. So if the dollar continues, do we actually see the stock market pause a little bit? Right? We'll see. So keep an eye on this. But if we clear, if we make another fresh high tomorrow or the end of this week, if we're outside of this this falling wedge, then I think there's room to get up into the 100, 100 to 101 to 102. That's kind of my big window. If I'm looking to fade the dollar, that's where it's at. 100, 101, 102. If you're long, that's a good profit level to trail. If you're looking to short, I think 100, 101, 102, trade very, very small in anticipation of a turning point. And then if you're getting that confirmation, then you can start adding back to those shorts and build this thing back up to the lows. Make sense? All right. Okay, we have 5 minutes left. Crunch time here. Sticky gamma level at the 67.55. I mean, come on, man. Like, put up or shut up, either below 50 or get me to 60. Don't finish at 55. That's kind of the weakest spot of my two trades right now. Obviously, it's getting bigger and bigger, but there's going to be a lot of hurdles and a lot of jumping around, a lot of back. I mean, look at this thing. This is live 0 DT. This is kind of crazy stuff. So either we melt up into the 6, 7, 8, 9. I'm trying to pin this thing at 60, or we fall back down to 50. And right now it's sticky around 55. So I don't want it to cash settle at 55. Make a decision. Either go to 60 and get me paid, go down below 50, get me paid, give me something. But when the day is cash settled in 4 minutes, I'll tell you exactly what the win loss is for the day. I just know that my winner is either less than 50 or at 60. And I have a 5-point buffer on either side of 60. My line in the sand on the bear call spread is at 67.50. So I need price to technically be below 67.50 for the winner, or like I said, my break even is a 67.51.20. Okay. Historically, what second year of new presidents like first year's been hard? Actually, it's usually most disruptive during midterms. So going into the second year of the presidency, midterms can be pretty disruptive, but little to no disruption until that. So I would say right now the narrative is path of least resistance remains bullish. The administration is doing kind of whatever it takes to achieve the agenda that they set out. Granted, they pivoted very hard from Doge to cutting spending to being practicing austerity to then pivoting into we got to grow, right? Stabilize the bond market. We got to grow. Let's melt up. Let's run this thing hot. Let's pressure the Fed, stack the Fed to cut rates. It's a very aggressive pivot from March and April. Okay, but the reality is that's the current path that we're on. Midterms would be if people are upset enough to vote on this, then the pendulum swings from right to left. And so if we see a big win in the midterms where all of a sudden Republicans lose Senate seats, Republicans lose representative seats, then you're going to have Donald Trump very, I'd say, um, a little bit less effective for the next 2 years. But until we hit midterms, until we have that disruptive vote, right now it's path of least resistance. This is why I'm still buying every dip. Even though these dips are few and far between, these dips are like freaking 1% to 2% pullbacks. That's it. It's not a pullback. It's like the market just coughs half of 1% and it's like, buy the dip, right? Market pulls back 1%, like a 2-day decline, buy the dip. We're not getting what I think technically is a meaningful pullback. I like a 3 to 5% correction. I'll see if I can find the stats here. I know I have a screenshot of it. Let me go downloads, bear market. Bulls versus bears, improvements, trends, history. September history lesson. Oh, I know it's in here somewhere. I just got to find the keyword for it. Nope. Fudge. Well, I can look at it. Let me go to... I'll try to prompt the question in AI. I'm going to use Grok. Let's go. Give me a table from 1990 to present on the S&P with how many 1%, 2%, 3%, 5%, 10%, 15%, and 20% pullbacks we have during the trading year. Because we have 100% of the trading years, we have like a 1% pullback. I think 90+% of the trading years, we have typically a 3 to 5% pullback. 40% of the trading years, we have like a 5 to 10% pullback. I think it's less than 20% of the time. That was quick. Son of a biscuit, man. We cash settled at 53. Oh, there's my weak spot of the day. Damn it. All right. So 67.53. Well, that means I just lost 380 and another 90. That's freaking annoying. All right. So I needed price to be at 6751.20. We closed at 6753.58. I didn't lose. The nice thing is I didn't lose a full $4. Okay. So 358. So I lost $3.58 on the bear call spread minus the $1.20 credit. I technically lost $238 today. So it's not the end of the world. We can certainly come back for that and survive. But yeah, we settled at 53. That was above my break even. So I took a small loss, $2.38. So for daily profit play today, where did we settle? Here is my, gosh, what a piece of crap day. So stupid, man. I rely on Mondays and Wednesdays to be cooperative, and this was a stupid day. So it just, ripped this morning out of nowhere, 10 o'clock, market's up, VIX drops, and we just went nowhere for the rest of the day. Unfortunately, I didn't get that push down below 50. But it's a partial loss. I mean, it's not the end of the world. So we settled in at 67.53. I'll take a screenshot. Copy link. All right, prices between the 50% ATRs for the morning, and then I will add to this 10 a.m. push was aggressively bullish, and price stalled out between the 50% and 100%. Up ATR levels. Cash settled at 67.53 for a partial loss on the day. So we had the 67.50 by 67.55. So between the 50s, that's a no. Win the day, that's a no. Partial loss. So for the live trade, For 10-8 expiration, I'll add this in. So 501, 10-8 expiration. We opened up price today around 67.30. SPX 10-8 expiration, 67.50, 67.55, 66.95, and 66.90. Pulled in $1.20 and exited at 3.71. So my cash settled here was 72. So exit at 372 for a loss. That'd be 3.72 minus $1.20. I lost 252 on the day. Risk was 3.80. Okay. So not a full loss, partial loss, but again, annoying day. Yep. So it was close, but unfortunately not enough. And, again, and we said this before, when you're in a 0-day environment, if the market literally closes at the high of the day, there's very little wiggle room for a 0-day to survive, right? I mean, and honestly, look, I had trades sitting here at 60 and 65, 75 and 80 that didn't fill. So the additional trades I wanted for $1 and $1 would have been enough to wash most of the risk off. They didn't fill today. Not a single one. So my bear call spreads to kind of help with the risk and also try to win the day didn't fill. So it is just one of those days where it didn't cooperate, but it is what it is. So we come back and we tackle again tomorrow, try to win the day. Okay. All right. So new day tomorrow. Let's price this out at 6753. I'll update my daily profit play indicator. 6753. And the VIX retreated down to, that was a pretty big drop in the VIX today. It was down 5.5%. So, bullish on the day was the net result. It was a, half a 1% move, 0.6% higher, little gap, and then a big surge there at 10 o'clock. So it is what it is. Look, tomorrow is going to be interesting, right? Are we at new all-time highs running into Thursday, or is this just running up into Wednesday, hitting resistance, and we open up and we fall? I have no idea. But there's no employment news on Thursday. There's no employment news on Friday. Path of least resistance is this zombie complacent bullish melt up, or resistance is if the market just acknowledges like, hey, it's still resistance right here. It's still support right here. Okay. If the futures market overnight is drifting higher, I'm not going to fight this thing. I'll just mechanically trade our 0DT and daily profit like we always do. But if we're opening up, right at this level, or we open up a little bit softer, then I think resistance holds and we're going to be right back into the middle of all this crap, or coming back down to test lows like we saw on Tuesday. Okay. So we'll see what futures does overnight. We'll come back and tackle this again tomorrow. But, on a positive, it wasn't a full loss. It's very manageable. And we'll go from there. That being said, I did have, 2 winners on broke wing butterflies, which did help offset that. So a loss today is, mostly contained with a couple of wins on those broke wing butterflies. All right. So that should kind of wrap it up for today. Currency strength, again, we'll see what happens tomorrow. The Japanese yen remains weak. Job wise, we don't have any labor news. Unemployment claims aren't coming out, and non-farm payroll isn't even on the calendar. So I think the shutdown continues. If there's some 11th hour deal that gets struck over the weekend, maybe it comes back online. Maybe they push non-farm to the 17th, maybe. But what's interesting is next week's data. If we push out non-farm to the 17th, we have inflation news next week. And if they push non-farm to the 17th, you're going to have CPI and PPI and non-farm all in the same week. So all it means is there's an excuse for the market to move and give us a lot of volatility. Doesn't mean anything directionally, but it gives the market a reason to move. Okay. All right. So keep an eye on things. We'll come back and tackle this again tomorrow. Just a recap from me, daily profit plan, weekdays at 9 a.m. Eastern time. All are welcome to join. I'll post a link in the chat. I'm having a masterclass tomorrow on waterfall income. We'll take daily profit play in the morning. Project options edge. I'm trying to think, did I put in a new trade today? I'm going to put a new trade in tomorrow. I'm looking at a trade on HIMS. Ticker is HIMS. I'm looking at a ratio spread on that one. So we'll keep a close eye on that for tomorrow for Project Options Edge. Quick guide is $27 for practical options. I've had a handful of sales this week on the $27 quick guide. I've also had a couple of purchases on the full course, which is an upgrade to $497. This one is, I'll just give you a little sneak peek here. So here, actually, I'll show you. Let me see if I can pull up. So here's practical, and here is the full course. So practical options is on my on-demand page. Intro and guide, which I walk you through it, and then buying calls, buying puts, bullish spreads, bearish spreads. So whether they're debit spreads or credit spreads, giving you the lay of the land for taking some very simple spreads directionally. Okay, that's my quick guide for $27. The full course is $497, and all that is intro, key terms, risk graphs, options chain on several different broker platforms, walking you through a strategy guide that's 70 plus pages, buying calls and buying puts, doing bullish and bearish spreads, calendar spreads, diagonal spreads, butterfly spreads, strangles, and iron condors. Again, you don't have to know the names. What this is helping us learn is if you want to trade the market up or down or sideways, there are strategies in here to help you get comfortable doing that. You know what the trade is, you know what the defined risk is, you know what the trade is going to be for profit or loss. And I show you that in the risk graph. We can think about that in terms of our charts. So when I place a trade, I want us to know the line in the sand. That's why today's price action, I knew that if price was less than 67.50, I would make money. If price was at 67.55 to 67.65, I would make money. But I didn't make money because it was at 53. So I took a partial loss on the bear call spread. It is fine. I survive and trade and move on. Okay. But if you know that stuff ahead of time, you're a lot further ahead than most people that have no clue what it's like to buy a call option, what that means, buy a put option, what that means. You know, I prefer to take defined risk where I know the upside, I know the probabilities, I know the downside, I know where price has to be for us to make money, I know where price, has risk. But if we lose, you take it in stride. I can always be annoyed with my losses, but I'm never going to blow up a trade. Okay. All right. Lee mentioned something about waterfall. Let me see what Lee said. Oh, William mentioned something about waterfall. Yep, I trade waterfall every Monday at 11:30. So 11:30 a.m. on Mondays is a live session. We do a trading session on Mondays, and then tomorrow, Thursday and Friday this week, I'm doing a 1 p.m. masterclass. So I'm going to teach a strategy 1 class tomorrow and a strategy 2 class on Friday. We have 93 winning trades so far in the service in the last year. We have won those 93 trades with a 93% win rate. And I put trades in for 4 orders today for more winners at probably 90 plus % of the credit. So if we close those out, that's going to be trades 94, 5, 6, 7 winners. I mean, pretty soon we have enough trades stacked up that we'll be crossing over 100 winners in the service with a 93, 94% win rate. So it's one of my favorite strategies to introduce people to options and also, basically trade the phenomenon that is dollar cost averaging into the indexes that are designed to go higher. So I trade the S&P, the Nasdaq, the Russell, and the Dow. I prefer the S&P because it's easy to trade SPX and XSP, which are cash settled. There's also a good tax break on those if you're using those as whether you have trader status or not. If you're trading SPX in your portfolio, you get a 60-40 split. So all of your gains are taxed at about a net 20-21% versus a capital gains tax at 34 if you're in the U.S. So food for thought. Cool. So all right, let's come back and do it again tomorrow. So I'll update Telegram. We'll wrap up today's session. We'll come back and do it again tomorrow. I'll be starting off bright and early in the morning. I'll be joining the A1 trading team at 6:30 a.m. my time or 8:30 a.m. Eastern time, and then we'll jump into daily profit play for trending Thursdays. We'll see what maybe unemployment data gives us or lack of, and we'll see what the market does. Right now, we are sitting at all-time highs with a nice intra-week resistance. So this is last week's high right here. Okay, last week's high was just barely breached. So tomorrow in this futures market will be interesting. Are we going to push higher into futures and stay here, or are we going to go sideways and give it back? Right? So if the floor tomorrow with today's choppiness around 50, if we break back down here, I think this is a range trade. If we drift higher into futures open, it's probably just keep the party going and nothing bad is happening until the government comes back online. Right? No news is good news right now. Okay. Bashi, I didn't see the earlier question. What's it say here? I'll join because this seems interesting. Did you see the earlier question? I don't think I did. I traded London on M1. How can options help me? Um, I mean, are you talking trading currencies primarily? Are you trading like London session? I mean, you can trade futures. I think the transition into learning options. What you look, you can do everything that I do with trading individual stocks, individual indexes. You can trade S&P futures options. You can trade Nasdaq futures options. I like S&P futures options because it's very liquid. Um, again, it just adds another arrow in your quiver. It's another way to see the market. The one thing I like about options so much is you can eliminate all of the manipulation at highs and lows, right? I mean, all you trade is price and time. If price is above a level, I make money. If price is below a level, I make money or lose money. It's like you can create the trade where all you have to know is at a certain price by a certain time, is price at or above your level to make money. And you know that trade literally when you execute it, you know exactly where you have to be. And you can take partial profits along the way, and you can let it go to expiration and take full profits. You obviously know that if the trade goes against you, there's only X amount you can lose, and you set that up hopefully responsibly at the very beginning, and you're going to lose, a responsible less than 1%. So that's me, man. I mean, a lot of my losses are fractions of 1%. A lot of my winners are fractions of 1%. I win a lot more trades than I lose, and it's just building up base hits. Thousands and thousands of base hits to pad my stats for the year. Yep. So if you trade forex, I get it. And I managed a currency fund for a long time. I still trade, my own accounts, but I migrated all of my managed accounts over into stocks, indexes, options. I trade everything. So there's less forex exposure now. I mostly just manage it, in my personal accounts, run some robots and things like that. But the manipulation in forex, the highs and lows, to me, to be a consistent forex trader, it's almost impossible to use stop losses. If you really want to have a high win percentage, you can't use stop losses because too many times price will test a high, test a low, and stop you out only to see price go the way you want it to go. Right. And that's really, really frustrating. So to combat that, I just end up trading Forex smaller and sizing in. So I would trade basically a second level at resistance. So instead of getting poked at a stop loss, I put in a smaller second trade and then I kind of let it survive and let price, kind of do its thing where highs and lows are always manipulated in Forex. And they're also manipulated a lot in futures trading. And I see a lot of traders they get those paper cut losses where they lose in a stop loss and then price goes their way and they get so mad and so angry. But it's the game, it's that hunt for liquidity that happens. It's stop loss hunting. So that's why I like to trade options because they can't do that. All you have is price and time. So there's way less manipulation. You know exactly what you can risk and your reward from the very beginning. Yep. So with indexes, I mean, you can trade index futures. You can trade index options. You can trade futures options. You can even trade currency options. So you can trade 6E and 6A and 6B or J, and you can trade futures options too. In fact, one of my favorite trades this year was 6J and getting along the Japanese yen. This was early in the year when it actually was strong, not the last 3 days when it's been crazy weak. So anyway, food for thought. So all right, I'll let you go. I'm gonna hop and do another meeting and come back and do it again tomorrow. All right, see you soon. Thanks. Bye.